Good afternoon and welcome to Markets Today. I'm your host, Mbithe Muema. Today is Tuesday, the 10th of September. It's a very slow day on the equities, and that's the Nairobi Securities Exchange. It's also a very slow day with regards to corporate news or corporate actions that are coming through our desk this afternoon. For your information, we'll just give you an overview of what happened yesterday on the NSE with regards to turnover. What are the foreigners doing? What are the local investors doing? We'll also give you highlights with regards to corporate actions that we will be looking out for this week. But more importantly, the core of our discussion today, we want to look at Safaricom. What is happening vis-a-vis the Telkom and Airtel proposed merger? There has been a slowdown, and Safaricom has potentially been accused of trying to slow this down for one reason or another. Safaricom did come out last week and give its opinion with regards to non-interference as far as this transaction is concerned. Safaricom also came out again last week and came out with two key issues of portent that they want to focus on: money that is owed to them, as well as the allocation of resources that are critical to running a telecom business. We will be discussing this later on in the show. Now, yesterday's NSE turnover was at 187 million shillings traded. That's a paltry sum, but it also tends to be what happens at the beginning of the week. Mondays are very blue when it comes to the NSE. Safaricom dominated trades yesterday. It closed at a price of 26.85. This is against a background of a record date last week for its ordinary dividend as well as its special dividend that culminated to a total of 1.87 shillings paid out to investors. We were expecting a correction of 28.2 shillings. It's trading slightly above that. Sorry, we're expecting a correction of the price to 28.2 shillings. 26.2 shillings. It's trading at 26.85, so not too much has happened there. We want to explore the opportunity in this particular stock for you as an investor. Is there any more upside after this special dividend? Should we actually expect another special dividend in the next financial year and then in the next 2 to 3 financial years? We will be discussing that later on. Our graphics team will be putting up something very interesting for us. We are actually looking at the order paper with regards to the Parliament of Kenya, which has resumed its sessions this afternoon. I think we shall await our graphics team to put up that chart. What we're looking at is the banks. There has been a news article that came out yesterday in one of the local dailies, and the committee that's responsible for evaluating the proposed amendment to the Banking Act has actually went to meet the Treasury Secretary yesterday, as well as the acting permanent secretary in the Treasury Department. The conversations were twofold. Treasury is insisted that this removal of the rate cap needs to happen. Currently, there is a rate cap on loans that are facilitated in Kenya through the financial system. This is the banks and the SACCOs, and you cannot be able to extend these loans above 4 percentage points over the central bank rate. Today, the pricing for these loans is 13%. The argument from Treasury is this is curtailing access to credit, mostly by the SME sector. SMEs contribute about 75% to GDP and productivity overall. Once they're starved of cash, this causes a slowdown and really a slump in economic activity. So Treasury is saying we need this money to be able to go out there. It cannot go out there as long as it's capped and it's regulated by the central bank. There needs to be a fair way or a better way of being able to price risk, and you really need to allow the markets to rely on their own forces and their own insights when they're pricing the capital, and they are the owners of the capital. On the flip side, we have the legislators who are coming and saying they need to protect the consumer with regards to pricing. They say that they don't want an instance of predatory pricing, and as guys go and the economy going back to the levels where credit was actually priced at about 24% prior to the rate cap that actually came in 2016. The committee that met with Treasury yesterday had a couple of proposals. For one, they did say that they don't want any particular action that's taken with regards to the Banking Act. This is on the pricing of loans, to actually go back and look at the existing loans. They actually propose that if anything happens, it should be forward-looking and not affect the existing loan holders. They also went a step further and they said they would prefer a risk-based pricing mechanism where the banks are able to show a scientific way and a schematic way of being able to evaluate the risk per customer and pricing that way, so that people who have a lesser risk profile get cheaper credit, and those who are riskier, they get a more expensive credit, but it needs to be able to be documented. So at this point in time, nothing has actually formally come out with regards to this. We're still out there. There's a part of the economy that actually expects absolutely no adjustment to this particular finance bill touching on the cost of credit, and then the other half actually expects a slight adjustment. On my part, I actually expect a slight adjustment whether with regards to the reference rate, maybe an amendment rather than using the central bank rate, or an upside with regards to looking at a risk-based pricing. Why do I think this? We have an overview, an excerpt from the Parliament of Kenya, and this is the order paper. Parliament was in recess and it has resumed this afternoon. It says this afternoon, it sits for a full day on Wednesday and sits again on Thursday afternoon, and that's every week. For the order paper that came out yesterday, we actually have the Banking Amendment Bill by the that's a National Assembly bill. We have the MP, Honorable Jude Njomo, who's actually going to be presenting this to Parliament. And the thing is, there will be no debate here. It's really questions to be put. So if any parliamentarians have any questions or any considerations that they want to be taken up on behalf of this banking amendment bill, Jude Njomo will be the one who will be tabling this and documenting any questions. We think this will be a pertinent session to actually follow through. That is tomorrow afternoon, to understand what are the questions that the MPs are concerned about, what considerations do they want to bring to the table, and do they agree that a full removal of the rate cap should be done, and if not, what are their proposals? This will be important as we head into the third reading of this particular paper. It has to go through a committee. A committee has to go out there and take in opinions from other stakeholders outside of the Legislative Assembly. So a very pertinent consideration for us tomorrow. We will keep you updated on that. On the final point, if you're looking at Kenyan banks today, from 2016 to date, they're actually trading at a discount with regards to valuation. This discount is about 0.87 times book. We haven't seen this number in a very long while. We think the opportunities there are given the valuations that we have seen in the correction with regards to prices. Whether the finance bill is amended or not, today you are looking at an industry that has become nimble, that has improved with regards to its efficiency, and has tapped into the digital transformation to be able to enhance profitability. In other words, we think we have a more robust banking sector. The question is, where do we see value? With regards to dividend yield, we are seeing value on Barclays Bank that is paying 10% dividend yield. This could be short-lived because Barclays has to be able to cash out money for its change of strategy from Barclays to Absa Group. So there's a bit of a risk there. When you're looking at valuation and looking at the top banks, Equity Bank is trading at 1.5 times price to book valuation, a key metric for your own benefit, and it's coming from a high of 2.2 times book. So we see a discount opportunity there. KCB is another favorite, trading at 1 times book, and this is after the dilution from the acquisition of National Bank. So we see some interesting opportunities there with the top tier banks. If you're looking at price appreciation or capital appreciation for that matter, we also see some opportunities with regards to dividends. We will keep you updated on this and other stories that are related to the banking sector as we go along. Before we take our break, we are looking at Safaricom. If you're a user of the service, you've certainly experienced over the last month or so a shortfall with regards to the quality of service, whether it's on internet connectivity, access to your M-Pesa services, or even the quality of the phone services, mostly if you're indoors. We want to understand what is happening to the capacity of this of Safaricom. Are they short of capacity? Are they able to still continue providing quality services to you as a consumer? We also want to understand what is happening with regards to the merger with Telkom and Airtel. Will that be a competitive threat, and would that have a potential risk with regards to the future earnings of Safaricom? We will be looking at the spectrum. We want to understand the upside on the M-Pesa platform as well as the upside on data, and to understand at 26.85 shillings, what more could you potentially be able to get with regards to price and any potential dividends that could be paid further along as we look into the forward-looking years. Maureen Kiriga is an equity analyst for the Telecoms department, or the Telecoms research section at African Alliance. She will be helping us understand this conversation. We take a short break with the daily commodities, and as always, we are running live on our Metropole Facebook page, our YouTube page. Log in to there if you just haven't, or if you've joined us, welcome aboard. We take a short break on daily commodities. See you shortly.